Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. The most importantly, the stocks which have been a flavor of the first quarter of 2022 listed in the last quarter of 2021, where the Zomato, Paytm, Nykaa and most of the investors have stuck in those stocks. They were the flavor once the listing happened. The momentum, some of the stocks nearly doubled over or more than double, and some of the stocks after listing has seen just a southwards journey. Uh, we are discussing three stocks in this video: Zomato, Paytm, and Nykaa. And these three stocks, I know many of the investors have been stuck and looking for a views. What are the future, or should you hold? What are the technical structure indicating? Is there something in the company which is important to hold or stay invested in the stocks? So if I just look at this Zomato, I guess it listed somewhere, the IPO price was somewhere around 72, 76 rupees. Listed, went on to the higher, somewhere around 168, 69 was its 52-week high. Back towards 60s now, trending at around 62, 61 levels. I would say nearly down from its 63% from its 52-week high. Paytm IPO price was somewhere around 2080, 2185, listed on a negative side, and since then the journey was down and down and down and down, and most of the investors have stuck into the Paytm. I guess they got an exit into the Zomato because 70 to 169, it's more than double, and now the stock price is trending lower. So if I just look at the Paytm, I guess 1955 was its all-time high since listing, or the 52-week high, I would say. And the stock is currently trading at around 680, and it went much lower than that, but currently trading at 687, 688. And it's been down by around, if I just look at 65% from its all-time high, probably 70% from its IPO price, or over 70%. And the third stock which we'll be discussing is Nykaa. List IPO price was somewhere around 1100 rupees, went higher around 2500 rupees, so it's around 1500%, 1000 to 2500, and now back towards 1200 levels, down by around 52%. So I have taken two theories over here why you should look for a bottoming phase of a stock, or have the stock bottomed out. And these two theory are for a long term per se. And the first theory which we'll be discussing is the Wyckoff pattern, and the second would be the golden cross. So I'll explain the theory first, what is the theory all about, and then move on to the charts of the three stocks: Zomato, Paytm, and Nykaa. So let's look at the first chart on your screen. This is the Wyckoff pattern or Wyckoff theory. It was introduced by Mr. Richard Wyckoff, and he was one of the journalists in the Wall Street back in early 1900s. And his idea was to come up with the Wyckoff pattern, as that most of the investor, most of the institutions or big ticket size players, when they buy the stock, most of the retailers don't know that they are cornering the stock, or they are buying, or they are accumulating the stock. And by the time they know, the stock has gone by around 2x, 3x, 4x, 5x, 6x, and then retailers jump onto that stock. And at that point in time, it may be that this big investor, or the whales, generally it is known as the higher ticket size investors, they try to exit from their position because the money has been multifold since their investment value. So theory was that in case these investors are buying, or the whales are buying, the small fish like retail investors should understand, and they should jump at that point in time when the accumulation of by the large investors are happening. So just understand this theory, how this, then there is a phase. This is an accumulation phase of the Wyckoff theory, and Mr. Wyckoff have defined some of the phases and how to look at that. So initially, when the stocks witness a preliminary selling, and then the selling climax phase, which is the most important, and it is the last phase of the bear market or bear structure over here, where the volumes are much higher. And I'll be discussing each and every stock, the three stocks which have been as per the Wyckoff theory. The structure here, when the highest volume sell off happened, it's generally known as selling climax, and there's an end to the bearish momentum. I would say it's not an end of a trend, but there is an end of a bearish momentum, and then stocks goes sideways to a slow moving phase, which is generally known as automatic reaction, bounces there, and most of the investors feel that, oh, the stock has bottomed out and it is time for investment. No, the stocks goes into a phases with ST, which is known as secondary test. Then a new low has been hit, and the reversal which happens after the new low with a huge volumes is known as spring or shakeout, which means that the investors which have bought, say probably at 100 and 105, 110, 120, and the stock hits the new low of around say 90. So as an investment of say 1 lakh rupees, if I want to buy shares which is trading at 100 rupees, I would get somewhere 1000 quantities. But the same 1 lakh, if I'm going and investing at 90 rupees, I'll get a higher quantity. So big investors, what they do, that they take the stock lower prices, where the retail investor exit in case that the blow has been broken down and it's time to exit because the stop loss has been triggered. That retailer selling is the maximum accumulation happens by the big investor or the whales, I would say. And this accumulation is the most of the time bottom out, and most of the retail investors are, I have exited at the bottom. I guess you have experienced the same thing, that you exited at price when the price have hit the bottom and the price of the stock has gone multifold. This is the reason generally it happens, that the stock price hit lower, previous low has been breached, and the retail investors exit their position. At that point in time, the big institutions get the maximum quantity at the lower price. At the With the prices, there are huge volumes as well. So at a quantity they needed, they will get when the prices are broken out, and then the price stocks turn out. The second theory which I'll be discussing is the golden cross. Now, if you look at the screen over here, the golden cross is where your 50 exponential or simple, whatever you're using, days average, move above the 200 days. The short term average, which is the 50, and the long term, which is the 200. The orange line, if you look at the screen, is the long term 200 days average. Either you are taking exponential, either you are taking simple. I generally prefer exponential because it gives weightage to the current price action. So there are technical analysts who follow simple, who follow exponential, who follow weighted average. So you can decide whatever you want to, but I generally follow exponential. So if I just look at the theory, when a short term, which is 50 exponential, move above the 200 exponential, it's a sign of a bullish structure. Now look at the first Zomato. Let's look at the Wyckoff theory over here. And if I just look at the Wyckoff theory on the Zomato, look at the preliminary selling right from 168, 169. The initial leg was the preliminary selling. Then the most of the volumes, if you look at the lower panel, happened in the selling climax. And stock had a bounce back where generally trap happens. Or as I said, people feel that the stock has bottom on it is a good time to invest. No, it's generally the trap which happens into the momentum. And look at the price turning right from the selling climax high, which was somewhere around 90, 93 rupees, turning back towards the lower level of around 40, 42 sort of lows. Now, if you look at the whole structure, it took after the AR or the trap. If you look at AR, is basically the automatic reaction, and the abbreviations are generally, when I have discussed the Wyckoff pattern, there are abbreviations. In case you don't understand the short forms, you can just go to back to that image and look at what are the abbreviations. And if you look at the whole phase between AR to the low, which where I have marked the springs, it was slow and steady. It was not a fast and furious like it happened into the selling climax. Price made a low, and look at the reversal with the volumes which has happened in the lower panel. If you look at the volumes on the downside over here, the volumes are very much fast, and the movement have been very fast and furious with the huge volumes over here. It indicates that a shakeout has happened, where the bears have been exited when the new low was taken out, and the whales, which are the big investors, have accumulated a huge quantity. And look at the reversal which happened right from around 42, 43 to around 65, 66 levels in the quick time. And then it's a last point of support, which is generally LPS. And as per the Wyckoff theory, I think the structure seems very, very exciting. Now the 52-week low of around 40, 42 has been not broken. The structure remains bullish. But what about the golden cross? has it happened the golden cross? Look at the second chart over here. Since it's a negative momentum or the listing, it has been onto the downside where it has not yet shown a golden cross. But if you look at the averages at current point in time, the blue and orange both, they are converging at certain time, though there is not a crossover happened yet, but they are trying to converge. And if in case we see a bullish momentum happening, there could be a possibility that there could be a golden cross, and the structure with Wyckoff as well as the golden cross may turn bullish. But as of now, as per Wyckoff, yes, it has shown a bullish structure, but as per golden cross, I will wait for a confirmation of the golden cross to look at the bullish scenario. It may take a certain time correction or a range amount happening, and then we may move higher, or it will not give a crossover and turn down to the downside. But yes, as of now, till 40-45 is not broken, the range, the recent lows of 52-week low, till I think yes, the structure seem exciting for bulls. As an investor, I'll keep a watch the stock onto my watch list till the golden crossover happens. Look at the second chart. Second stock is Paytm. Since listing, the stock has seen a preliminary selling pressure, and it was a southwards journey one way. Selling climax happened with a huge volume, and if you look at right at the selling climax, the huge volume happened and the stocks went into the range bound structure. There was a bounce, we had a hit a new low, but as of the Wyckoff theory and the volumes, I still believe that the spring is yet to come, or shakeout is yet to happen. It may or may not happen, I'm not sure, but I'm not convinced with the momentum which has gone higher. Look at the volumes; they are not indicating an exciting volumes to go higher when the stock is has seen from around 550 levels to around 800 levels. The volumes is very much missing, which means that the accumulation is not yet happened, or probably it is a slow and steady. The time will tell, but I think the structure is still incomplete. I'm not sure about the Wyckoff pattern, whether it has been bottom out. So as per the Wyckoff theory, I don't think that it has bottom out. And if I just look at the golden cross, the second condition over here, the averages have converged, but yet to break out or give the positive crossover, which means that I'm 50, the blue we should go higher above the orange line, which is 200 days average. It's yet to be taken out. So I still think it's an avoidable stock as an investor if you are looking for a new entry. Look at the third stock, Nykaa. I would say IPO prices were around 1100, stock went to around 2500. Most of the investors might have got exit. In case those who believe that the stock was very good and have been holding on, they have been into the pain as of now. But yes, it is at the cost 1200 rupees. I would not say it is into the loss at certain point in time. Yes, it's been trending at around 52-week lows. As an investor, it would hurt when your profits are running into more than double and it's back to cost now. But yes, if you look at the structure over here, it is on the verge of giving a shakeout. I would not say it has happened the shakeout, because look at the volumes at the lower levels, not yet seen into the momentum. Plus, if you look at the structure of the AR and the selling climax, the high were same, so that would act as a major resistance. But as of now, if you look at the 1200 levels, if in case in the further coming weeks or coming months, we see a sharp recovery into the V-shaped recovery into the Nykaa once the stock falls below 1200 or probably 1100 rupees, and there is a fast and furious like we had in Zomato, right from around 40 to 65, and with a huge volumes, I probably may look at as investment on my watch list over here. If in case that thing happens, I'll just wait for how these things are turning onto the Nykaa on as per the Wyckoff stock. But as of now, yes, it is on a verge of moving into the spring phase or shakeout phase. Once the low is taken out onto the downside, and we may see a sharp recovery coming into the structure of the momentum. So yes, two things to keep out on the Nykaa. Yes, it is on a verge of entering into the spring phase. Volumes onto the downside should come very aggressive once the V-shaped recovery happen into the stock. Though markets have been slightly, I would say, on a negative sentimental, most of the mid caps have been outperforming. Most of the mid caps have been underperforming and trending at 52-week, and Nykaa is one of them, which is trending at 52-week lows over here. So keep a watch on this. Definitely on a watch on should be on your watch list. Once the V-shape recovery start, there could be a possibility that the Nykaa may bottom out into the once the low is taken out, and retailers may come to the exit where the whales which or the institution buying may come into the place into the this stock, and they may accumulate with the huge volume. So keep a watch on this on the volumes. On to the average, the second condition, the golden cross. If I just look at the structure, both the averages are trending onto the downside, so they are not indicating as of now the things may turn out to be a bullish onto the Nykaa as per the golden cross. But look at the average, both are trending onto the southwards momentum. So I'll wait. Do the average is at somewhere around 1400. The higher level is 1350, 1400. And in case the V-shape recovery happens, the fast and furious 50 days average may come higher. There could be a possibility of a golden cross happening into the stock with the Wyckoff theory. So yes, Paytm, I would say both the conditions are not indicating that there is an opportunity. Zomato, Wyckoff has been indicating an opportunity, but yes, golden cross is still pending. Nykaa, both conditions are not waiting, but they are on a verge of or a possibility of indicating as per the Wyckoff theory, and golden cross is yet to come. So keep a watch on this Nykaa. There could be an opportunity onto this stock. So signing off and have a profitable week.